Welcome back. You're still tuned into a halftime report on CNBC TV18. Well, let's get talking to Rajiv Batra of JPMorgan, who joins in now. They've come out with an interesting report where they are talking about the Indian elections and the nifty bull case, bear case, as well as the base case scenario when it comes to the Indian elections and how exactly the markets have performed historically. Rajiv, hi, welcome to the show and thank you very much for joining in. Well, just wanted to start by asking you about your base case for the Nifty, which currently stands at around 22,000. What is that predicated on when it comes to the elections?
Thanks, Ekta, for having me back on CNBC. So our base case target, as you pointed out, is 22,000, and that's where market has been trading for the last few months. That's the fair value level. It is premised on 15% earning growth forecast this year, with stable earnings revisions throughout this year, and with a good, solid macro backdrop, along with a continuity in the economic as well as fiscal policy of the country. So far, we have been seeing in the month of the March, there has been a decent macro backdrop. Inflation on the core side is at a multi-year low. Headline because of food is being sticky, and hence this is the reason why, as a house, we are even calling for monetary policy, that is rate cuts starting from August, depending on that if growth start tapering. But if growth doesn't taper, then even monetary policy rate cut doesn't happen. But all in all, the base case is premised on economic and fiscal policy continuity throughout this year and even beyond that.
Rate cut starting from August. That'll be interesting to see if that actually comes by or not, Rajiv, But you do see, I look at your Nifty bull and bear case targets. Bull case is at 25,000. Bear case is at 16,000. We are at 22,500. I mean, roughly thereabouts. We're closer to the bull case than the bear case. Is there a risk of more downside in the market in the near term, given the sort of price which is already there, and maybe, some of the estimates may have overshot themselves?
So the 16,000 target, Mangalam, is more premised on a few of the Black Swan event, which market is not at all pricing right now. So one such is global recession, which was a key theme everyone was playing till middle of the last year, or almost peaked at March 2023. Post that, people moved from a muddle through scenario and then they moved towards a Goldilocks scenario. So in case if we slip into an environment of, again, a recessionary condition because of an tightened monetary policy condition from the Fed or other G3 and G4 central bank side, then yes, it will be a risk to even Indian equity market because of global linkages, and especially we are trading at this 20 or 21 times forward P valuation. So that makes us vulnerable. At the same point of time, geopolitical tension, which we saw happening over the last 2 weeks' time, and that lead to a risk-off and higher VIX level for Indian equities too. So that is another place. Beyond that, you can say that if because of some catastrophe and this one, higher unemployment comes back into the picture, and government effort and focus shift from capex and investment again toward consumption and subsidizing the middle and the lower strata of the population, then definitely it will impact the structural growth prospects as well as the valuation multiple. But as I've said, that are more pertaining to something out of box or things which are not priced in, where we should be wary about. That's where the 16,000 target price is coming around.
What is the probability of it according to you?
If I have to assign probability at the current juncture, I will assign a very low probability because we are seeing at a global level, growth is still moving higher. From subpar, we have again moved to an potential or above potential global growth. Similarly, be it on the central bank side, yes, they are not talking about easing as of now, but at the same point of time, they are not talking about tightening. Even if we look at a dollar liquidity scenario that started improving from the month of November, and it has been improving and keeping at that higher level for entire this year. Coming back to the geopolitical tension side, difficult to predict. Nobody can predict on that one. But looking at the recent even past few days, yes, the friction has come down. And if you look at the gold prices, or even if you look at the recent move in the US 10-year, shows that market is again getting to a risk-on mode.
10% probability, would that be good? Would that be fair?
Yeah, I will assign that's lower end probability on that scenario.
Okay, 10%, because I'm just doing elementary math here. 10% of 16,000 and 90% of 25,000, which is your bear and bull, brings you closer to 24,000 on the Nifty, which still leaves you with a good 1,500 points on the way up. Let's talk stocks then, and let's talk themes. You've spoken about indigenous defense, affordable housing, savers to investors, waterways, manufacturing renaissance. In all these themes, if you had to, put, say, some money in a basket of stocks, which ones would they be, the best bets according to you?
So industrials and utilities are the one in terms of sectors will be the top beneficiaries out of this theme. Beyond that, it will be your real estate and corporate creditor side who will benefit out of this themes.
Okay. All right. I wanted more of your thoughts in terms of the manufacturing segment. How much of a play do you think the likes of Larsen & Toubro, Siemens, ABB would be going into elections as well as post-elections? Do you think that's a big theme that will probably play out? I'm not sure if you can talk stocks, but manufacturing.
Yeah, you're rightly pointed. I'm not allowed to talk on the single stocks, not approved for that one. But in terms of a sector, yes, right now, from the manufacturing perspective, if you look at a positioning, domestics, be it the retail or even the DIIs, are well positioned to that story. But when we look at a sectoral positioning for the foreign investors, they have not played this theme yet. Based on even my on-ground trip across the Western Hemisphere over the last 1 month, we clearly saw investors on foreign side are largely positioned into the consumption kind of a story, which played well for India since 1990 till 2015 or 2016. They are not well positioned on the investment cyclicals or the manufacturing side yet. But once we are done with the clearing event, for them it is election. Definitely they want to relook on the policy continuity, and hence that will bring them to a manufacturing play. Now, even if we look at a manufacturing sector, how it is growing, the key part of the growth, that 16.8% compounded annual earning growth, which your NSE listed or BSE listed companies have seen, has come from largely this industrials, utilities, or the capex oriented play over the last 3 years. And if government keeps on delivering on what they promised for 6.1% growth will come back on the capex, then this sector still have a huge upside from here. Hence, manufacturing renaissance is one of our key themes, not just from a 1 year, but even from longer term 5 years perspective.
Yes, and those stocks that you cannot speak about, but your house has a view on the stocks that are there in the manufacturing theme, and all the other themes that you're speaking about are flashing for our viewers on the screen. Just final question then from my end. This one's on Waterways itself. How sanguine are you on growth here? Because there have been plans around Waterways. How sure are you? What's the kind of growth expectation here from a macro standpoint and then percolating down to the micros?
So if we look at the entire term of policymaker for the last 10 years over there, the incumbent government, first term, they focused on roadways, infras and bridges. Second term, they focused largely on railways and defense. The third mode of transport or communication, which has been understated, but a lot of plannings and projects have been passed, was on the waterways side. We have seen, like in the last interim budget that's being touched upon, that close to 2,500 crore projects have been implemented and done under Sagarmala Yojana, and there is close to another 30,000 crore are currently in the execution kind of a phase. Now, we are aware that close to $82 billion were earmarked for Sagarmala for end of 2035. Considering now we are 10 years away towards that, and this is one segment of a transport of communication which is still pending, where government want to modernize port, work more on the inland waterways, shipping, and this one. So this could be one such theme can become interesting from the next 5 years perspective, according to us.
Up on that, since you said waterways is one of the themes which hasn't been touched upon, we've heard a lot on airways and MRO operations, etc., coming into India. Do you assign any probability to that, and are there stocks in that space as well?
I have not explored that at a stock level overall, but yes, outside of Singapore, some of the companies, outside of India, some of the companies in Singapore or even in Europe who are tying up with them, they are already seeing that benefit. And when you hear their result announcement and stuff, they do talk about of their tying up with their Indian partners on this airways and the MRO and the maintenance side. So that clearly shows that something is coming up, but it's more premised on what I'm hearing from the company statement outside of India.
Okay, just quickly before we have to wrap up this conversation, savers to investors, that's a theme that you all are looking at as well. I'm assuming that you're expecting much more in terms of SIPs and accounts opening, and hence you're probably propagating this idea, the likes of Angel One, MCX. I know you can't talk about it, but those are the stocks under your screener which come under this theme.
So we still believe that Indian residents are moving away from the physical assets more towards the financial asset side. Even if we look at the household balance sheet, the exposure towards financial assets, particularly equities, are quite less. That's the number one. And even beyond that, like we look at the most recent ownership of the equity market, 8.3 or 8.5% sit with retail investors. But as the literacy about the equity market, financial products are rising, and bond market is also now going to get further open up from June, GBI additions over there. That will lead to looking at much more stable and the better return. Indian consumer or resident will start moving towards that kind of a product. So that will benefit overall your listed exchanges, even your brokers, asset management companies, and even some of the wealth managers. So this is the bucket could be played on this particular theme, where your consumer who was just something like looking for financing or even for lending purpose, now moving towards consumer on the investment side. So it's on the consumer investment theme, which we are looking overall. Again, it's a long-term 5-year themes for us.
Rajiv, thank you so much for joining in with a whole host of ideas that you've laid out for us, the bear case, the bull case on the Nifty, and the themes that you're looking at over the next 5 years. We leave you with the promise that post-elections we'll get you back and then maybe talk a lot more. Then, we'll have a lot more clearer pictures, and we'll know whether we're closer to his bull case or bear case.
But you have to note that he said that the probability is extremely low for that 16,000 before people get a little, worried.
100%. So which is why people make those probability adjusted calls, right? So base case comes to close to around 23,000. That's pretty close to where we are right now on the Nifty itself. Take a short break, come back, get you more on the markets and a lot of individual stocks.